Good morning and welcome everyone to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from our Denver studio. And today, as we do once a month, I am pleased to be joined by my friend and fellow Schwab senior manager, Mr. Ray Kimbrell. Ray, it's good to see you, bud. How are you?
Good morning, Kevin, and everyone else, and Connie on chat. And it's great to be here and being inside because 105 today.
So you guys aren't cooling off like we are here in Denver, huh? It's just kind of
Nah,
staying elevated.
we're still cooking.
Okay. Well, I'm sorry to hear that, Ray. I hope you can enjoy your time indoors.
Yep.
Yes, as you said, Ray, we are joined by Connie Hill in the chat. Say hey to Connie, everybody. Connie, of course, a fantastic coach. She will get to comments and questions that Ray and I are unable to, but we try to keep a close eye on what's going on in the chat. We like to bring your questions and comments to the discussion where we can. So please feel free posting in there for the duration of our show. We're going to go about 45 minutes in total. You can also follow us all on X, Connie Hill CS, Ray Kimbrell CS, Kevin Horner CS. It's a good spot to find us when we're not hosting classes for you here. And make sure you're subscribed to the Schwab channel. We call it Trader Talks. Now, we're going to dive into our disclosures so that we can move to the charts, but we're also bringing an announcement and a reminder for you before we do all that. So let me hit the disclosures and then we'll get down to business. First of all, remember that everything we cover today should be considered informational and educational only. We do not make recommendations. We do not make any endorsement for a specific approach to trading the market, but we do offer up our insights and strategies of technical analysis that traders may choose to employ. Whether you choose to do so or not is entirely at your discretion. We invite you to use these concepts, but make sure you are working with them in a comfortable manner. Build them into your own process and customize your trade process, your ideas for order entry and order exit that fit your comfort for risk and tolerance and so forth. So make sure you're going through all those steps. Now, we always follow a top-down approach in this class, meaning we start with our broadest of indices. We'll work our way through the top ones, the NASDAQ 100, the Russell 2000, and the S&P 500. We'll look at semiconductors and a number of the other key elements of the broad market today as well. So we'll get to all of that. But before we do, I want to let you all know, since we have Ray today, we do have an upcoming event this evening we want to make you aware of. I'm going to take you through how to find it here. Ray, speak to us a little bit about what to expect tonight.
Yeah, so we're going to do it's a virtual workshop. Basically, it's the same content that we do the live events, and it's divided out over the next 4 days, and it culminates on Friday morning with the Q&A session. But myself, Scott Durfee, and the Ben Watson will be doing the advanced options virtual workshop. And so we'll go from our long verticals. Then the next day will be iron condors. Then we'll go to calendars, diagonal spreads, and then the Q&A. But it's a great 4 days of education. It's focused on those four strategies on each of those days, respectively. And we'd like to see you out there.
Excellent. And got to say, everyone, this is, as Ray mentions, it's basically the same structure that we offer you in the in-person events. You're just getting it in a virtual manner here. So you can register right here by clicking that link from the calendar. Again, it's just on our schwab.com/coaching page, followed by live webcasts, virtual workshops, and then you just scroll on down. Again, you're going to have access Monday through Thursday with a Q&A session thereafter on Friday. So for those of you looking to step up the options learning, that's a good spot to check out. So with that, Ray, let's get down to business. Let's talk about that S&P 500 here. We have popped to the upside. As you can see, we came close to getting into that 7,800 level. I think our high here has been 78.10, but it was not maintained. So what are you watching now that we've moved to this upside? Are there a price level you're paying attention to, or maybe a moving average?
I don't know. It's when all these people say, it's too high, and it gets higher, each time. Um, I kind of like, maybe looking at a new channel could be developing right there as it broke out. It's got that small resistant a support level, yeah, right through there. And
Something
so
like that?
that may be something to watch for as it continues to move and how we go through earnings. the rest of it, and obviously the oil. But yeah, I think watching the channel that it's reforming is kind of the route I'm looking.
Yeah, and you know what? If I take those, I'm going to leave that upper level on because that seems like a spot to keep a close eye on. Obviously, we can run into that upper portion and find that to be a little bit resistant for us, even though we have traders targeting that 8,000 level in the SPX, another 200 points above
Yeah.
where we are. If you're watching it from a trend standpoint, one of the other things to keep a close eye on, everyone, might be the shorter term moving average. You all know we've got the 20 in orange, the 50-day in purple. But if you're watching it from a trend standpoint, perhaps keep a close eye on the 10-day. Look at where we reside here. So
Mm.
we've gone up and we have consolidated, but we've still made higher lows. But for some traders, everybody, a move under the 10-day may be their pause to the trend that gives reason for a little bit of profit taking. And Ray, maybe all that means is a reversion to the prior highs in here, right around 7,600. Not a break of the trend per se, but just a
Right.
pullback possibly.
Yeah, I like that analysis. I mean, if you even follow, if you go further back, back into April, you watch how when you put that in there, how it has followed that 10-day
Oh yeah.
really nicely as it then even as it broke down, it became that as you look back to that area when you went back to that full year,
Yeah.
um, it looked like it was your resistance, and I mean it's holding pretty well to its form.
Hmm.
But yeah, I kind of like the how you phrase that, Kevin. It's and of course that the resistance you drew with the white line hitting that peak back in June, and then now back here in August. It's tracking well with those basic tenets of supply of support and resistance, and I think you're seeing it right in front of us.
Uh,
And
I'll tell you, Ray, sometimes it's just as simple as falling back on your basics, right? It doesn't have to
yeah,
be more complex than that, does it?
yeah, it's not rocket science. Don't make it rocket science.
Yeah. Yeah, we have a tendency to overthink things. And I say we, I say, us as humans, that's just our process. That's who
Me
we
too.
are. Yeah, I mean, I'm guilty just as much as anybody. But you're right. There was a very clear window where we tracked the 10-day. It was basically the beginning of April until we took it out here in early June. So you had about a 2-month window with really only one test below the 10-day. And then once we were below it with any significance, that's when we entered into the consolidation phase that we did. And so, as always, everyone, the moving average situation is such that you need to know your time frame for your approach to the trade. So if you're not a short-term trader, you're not concerned about the 10-day moving average. If you're the trader who's just monitoring the 50-day moving average, and you can note that we've been above that for the better part of the
Yeah,
last 6, 7 months, Ray. We've had minor moves, but we've also made levels of lows that have been maintained, meaning matching lows, not lower lows. And so
yeah,
when you look at it like that, whether it's a 50-day window, a 20-day window, a 10-day window, it's all about trend management for your comfort with the trend and your time frame. So try not to assign the 10-day. When I bring that up, that doesn't mean it's the one you need to work with. It's one that shorter term traders are eyeing and watching here now that we've made that move to the upside. They may choose to get a little defensive or take a little bit of profit on a close under that 10-day because it might mean a retreat to where we just came from for a test. But I got to say, Ray, as we move off of this, the reminder does need to be that these tests of support are
yeah,
actually interesting spots where traders get going again. So
yeah.
any pullback that comes to this zone might be an area where traders get enthused once more.
Yeah, I was gonna comment when you drew that support down lower. I was like, well, that new resistance that it formed that it broke that 76 range,
Yeah.
could be our pullback area. You know,
Hmm.
if you should decide to do that. And as you can look, if you look back, look at that last 3 months. I mean, that was a 400 uh, point range that
Yeah.
moved in, and now you're almost in that same kind of thing as it broke up.
It's funny how the math works, isn't it, Ray? I mean,
Yeah, it is.
if you were in a 400 point range up to 7,600, and then you break that range, many traders would take the height of that range and add it to the breakout, and that
Yeah,
400 points plus 7,600 gives you right at 8,000. So again, the math all kind of works. Doesn't mean we're going to get to 8,000, but it's why traders of a technical nature are targeting
exactly.
8,000.
Yeah.
All right. Well, let's see how our NASDAQ 100, our tech heavy group is looking. I'm going to change all this back to get all three of my major moving averages. Let's peek in on this one. Ray, it looks to me like now that we've broken the downtrend line, perhaps the path of least resistance is to the upside, but the momentum is not quite as strong as I think traders would prefer.
Yeah, and it could just be the whole aspect of the market, that what it's what it's tracking, and how that the uncertainty of what's going on right now, and the all the push and pull that's happening out in the news and the pundits, and it's they're looking at this, seeing what's happening, and you're
Hmm.
right. I mean, it did break out like somewhat like the you saw in the S&P 500. That's that one time frame, and now it's consolidating back. But yeah, you're not getting the big push that you thought it might have gotten.
Yeah, and I think that's just tied to maybe the allocation of the index,
Yeah,
being so heavily weighted on tech.
yeah.
It's not to suggest that tech isn't better because the technology sector has improved, but it's just not moving with the validity or the volatility that we saw from April, right? Where we
Oh yeah,
exploded to the upside. And so yes, we've got some minimal movement to the upside, but again, it feels more like a grind possible move to the upside if we're going to get into the former highs up here. And we have taken out enough of resistance to suggest that traders are of the belief that we can get to those prior highs because we're not very far off at this point, and you've got an improving condition over the 50-day moving average. You've got the 20-day down below that's working its way upward. So price action is dictating a shift. It's just not showing immense volatility or momentum at this moment. And I guess we'll have to wait and see how that comes. So it's certainly possible we could get it. We just haven't as of yet. Now,
yeah. It seemed like
interestingly, go ahead,
yeah.
Ray.
I
Yeah.
was gonna say it seemed like after the big jump, back in March, and how the big nice climb there.
Yeah.
Everybody was high on all the AI and all the things that are happening. Everybody was very positive. Then you got the big push to say, well, maybe not so, and you get the push of we don't want the AIs in our areas, and all the pushback there, and that's that battle I think that was
Yeah.
coming up there in June, and I think people are saying, well, AI is not going away, how now getting focused back in. Okay, how do we get this back in control? And people are seeing still some of the positive things out of that, and I think that's reflecting a little bit, potentially.
Yeah.
And and the news, I think this is kind of a big news driven um, push on a lot of the uncertainty and what's happening. And so, a lot of investors are going, no, I don't know, I don't know.
Hmm.
You know what I'm saying? And now they seem like they're coming back, like you were saying earlier, they're coming back to a better understanding of what is happening in this space.
Yeah. And it's expanding out too, Ray. It's not exclusive to technology. We know we've seen. It's
Yeah,
one of the reasons we've seen industrials do so well. Is the narrative and story around industrials is leaning towards, well, we're going to be building a
yeah,
lot, right?
yeah,
A lot of data centers. Whether I mean, obviously, the back and forth with these local communities is something to be monitored, but inevitably, when the buildings do get put up, it's going to be benefiting our industrial space. So it is not a technology exclusive story, but the movement in tech has been a little bit, at least of late, been a little bit more quiet, and
yeah,
that's when we looked at the S&P, like I said earlier, the allocation of the SPX being that it's so well diversified is one of the reasons we're seeing it at highs as opposed to the Nasdaq not at highs yet. But again, Path of least resistance seems as though we have a greater shot of making at least matching highs, Ray, maybe before we see the 200-day moving average. And I think that's not really a stretch given where we reside. I mean, we're pretty far
Yeah.
from the 200-day, not so far from those prior highs.
Yeah.
Let's peek in on our small caps here. Small caps made a new closing all-time high on Friday. It was a great development for us. Again, Ray, the small caps just kind of defying odds because we are digesting all those narratives around higher rates and no real concern here. I mean, last week the shift was the expectations for rate hikes kind of took it on the chin a little bit, especially for the forward month in September. So perhaps a little bit of an optimistic view going forward, nonetheless, on Russell. But what else are you watching here, Ray?
Yeah, kind of the same thing. I mean, it did break that that level. You got an all-time high, like I said, on Friday. Um, it's been pretty steadily moving up. I mean, I know the news, they're saying what was it, what was it, what would they measure? They said it didn't hit. We actually were 0.06% down on spending, I think it was.
Yes.
And then they wanted to they thought it was gonna be a little higher than that, but wasn't too off. So you're seeing, I mean, I don't know if Kevin, I haven't seen back like this is the cyclical time, and we get a little bit of a pullback on spending anyway, the summer doldrums uh,
Hmm.
before we get into the holiday season. So it's kind of seasonal, a little bit of that spending as well. I'm not sure if the Russell's seeing a little bit of that right now. How's that going to pop when we get into the fall? Um, so kind of watching kind of the same range you're in right now. Is it gonna break that? Is it gonna get some more all-time highs coming up as we
Hmm. I mean,
approach the cooler months?
it's been great. I mean, this has
Yeah,
been our hottest sector in terms of return. It's been wonderful. Now we do have a little bit of a divergence here.
I was
So
about to point that out. Yeah, I saw your
yeah, it
RSI down there.
bears watching, right? Because if this is a high in the RSI, then our momentum could be waning a little bit. That wouldn't shock us. But again, the reminder we need to offer as it relates to divergences, at least, remember that they don't always imply, or rather, we should not infer that a divergence means reversal is pending. But we could expect a pause to the trend, a consolidation window, whether that's consolidating by price or by time. So, a couple of weeks going sideways with no real movement, that can be consolidation. A quick pullback to the 50-day could
Hmm.
be consolidation as well, Ray. There's a lot of ways for that to occur. And again, it's not to suggest that the trend is bad. This is a strong trend, of
Yeah.
course. But if we're traders, then we need to be looking for our opportunities for profit taking and entrance back into trend. And I think for many traders, it's going to be right around that 50-day. Today it comes in at 29.72 for those looking to possibly expose new money. But still, a strong trend. Notice the 50-day here. We've been above it since the early portion of April, and we've only had one close below it, and that was at the end of July there. And then we were right back on. You know, Ray, if there's another one final point is just the reminder of how important it is to define our own confirmation. This is a great example of it, right? One day below the 50-day. For a lot of traders, that's not a broken trend, and clearly it wasn't a broken trend.
They also, and you also drew in there a really nice pennant um,
Ah.
that it broke out of, and so that's another thing that it shows. And you look at that, you have that. Yeah, I was gonna say you could draw that pole, and that might be your looking at your next just as technicals dictate,
Yep.
so to speak. Yeah, that's an interesting
That's
range.
all. That's
Yeah.
all I did, Ray. I think I added it from there, or actually from the I think initially what I did was added it from the bottom of the flag, the low in the flag,
Yep. There you go.
which just as a reminder, everybody, I mean, we all know that drawing lines like this is an art, not a science, and it's specific to each of us individually. But you don't have to draw your measured move targets the same as everybody else. A lot of traders will draw that measured move from the breakout spot, so basically the high of the cloth portion of the flag, and then others will draw it from the low. My idea is make it a conservative target, and then you have a greater chance of it being achieved. Make sure if it is achieved, you've got a plan of action to take some profits if that's your goal.
Yeah,
I think that's one way to think about it, but knowing that there is no absolute right way to draw a measured move, Ray, it's so important that we traders just kind of figure out what works well for us.
exactly. The thing that's kind of fun, folks, and that, I know y'all know this, but I had no idea Kiffin had drawn that up there. So I love when those kind of things work out.
Yeah, it's even more fun when you do that and you're not prepared. Just like you said, it happens to me all the time though, Ray. I'll put up those lines and levels and then I do some calculation or maybe add a Fibonacci retracement or something on it and
Yeah.
then everything lines up and then I just come out looking super smart when in reality it's just, the way that the price action moves. It's far less about me and much more about price.
Exactly.
Uh, so, Ray, we're going to move over to the semis here briefly. I wanted to touch on these guys. The improvement here, we got above, up into the 50-day. Boy, today is a really important day for a trend
Yeah.
standpoint, Ray, right?
Yeah. I mean, the same thing. Look at that. You drew it in well, that resistance level right there. Not only the horizontal, but with the 50-day, and it finally has broken that. So that could be something to watch closely. Um, I, be interesting, Kevin, if you haven't done it yet. Did you draw a Fibonacci from that pullback?
Yeah, let's do that. So, from our peak to
Yeah.
our trough,
Oh, look at that.
and then the 50%, that's where the red line came from, Ray. So a
Okay.
50% bounce back. So this is a great question, Ray. Is this a spot now where traders are going to say, all right, it's back into a risk on feeling on the semis?
Yeah, I mean and we kind of hit on this earlier when we did the Nasdaq, is what's going on with this kind of the whole AI, and how are the semiconductors, how are all these things kind of related and falling into each other, and that same fuzziness that you saw back there in the June timeframe is what you saw in the Nasdaq also, right?
Hmm.
And now it's kind of the it's kind of spun back around to a more positive scenario. It seems like within the news and the talk of the town, and maybe that's what we're seeing here a little bit, um, and maybe will continue on. We don't know. I mean, I wish we had that ability to tell you, oh yeah, look at this. This is great. But that's not how it works. Um, but you can only, and I know Kevin, you said this many times. You can only trade what you see, right?
Yep.
And you're seeing that 50% breaking. It's breaking above the moving average. So, is this something to watch? Yeah, it is. I think Kevin, you nailed it earlier. Said that's the spot to look for to see what's going on.
So let's just talk about it from a trade standpoint briefly, everybody. You can visually see the Fibonacci sequence that I've drawn in. I'm going to pull that off. Remind you that what we're seeing here in the way of the rectangle, that is the difference between the 50% retracement at the low and the 61.8% retracement at the high. Now, when we're talking about Fibonacci sequencing, it is often common to pull back 50% of a move and then take a pause. And so what we've seen is a sell-off, a rally back by 50%. Now the question is whether that's a rally back that we believe in is going to bring in more bullishness to the upside, or is the rally at a spot where it's apt to pause and or lose steam. So if you were the buyer back here at these lows, or maybe on the day we got our hold right here, maybe the trader in this zone is thinking, I'm going to take a little bit of profit. We've rallied off of that low. I mean, if we take our ultimate move to where we are, we're up 21% over 3 weeks. Pretty good move, right? So some traders would take a little bit off because you don't know what's coming from here. Now, alternatively, the trader who says, I still don't know, but I'm going to stick with it, is going to start to feel a lot more confident above the 61.8% level, because now the possibility is greater that we can go back to where we began that line from, which was again the prior highs, right? So when Fibonacci sequencing come into play, paying close attention to that 50% retracement level and that 61.8%. But as always, have a plan and know how you want to attack it. I think it's super important no matter what chart we're
Yeah.
looking at, Ray.
Hey, Kevin, throw the 10-day moving average on top of that.
Sure thing. Oh, look at that.
Yeah. And even if you kept the 10 and the 50 together, you're about to get a crossover. And it's showing you that, nice that's the support area has.
Yeah, let me update that for you real quick. I'll make it a 10 instead of a 20. So now my orange is a 10-day. So what you're talking about is
Yeah.
the crossing upward of the orange line through the 50-day,
Hmm.
which when it last happened back here was kind of significant.
Yeah.
And we can't say that it's, going to happen the same way necessarily, but look at the instances when it has, right? It's when
Yeah.
it's crossed to the upside, it's been bullish. When it's crossed to the downside, it's been bearish for a bit. That stands to reason, doesn't it?
Yeah. And good showing a good level of support as it runs up towards that potential cross.
Hmm.
So yeah, the
So
breakout and the cross. So yeah, I think you identified a key or a key point in time that to watch to see how that folds out.
so now if we are above it at the close today, that could be day one for some traders. We'll want to see maybe that's enough to get going, right? On a new position. Some traders are going to want a little bit more. They're going to look
Yeah.
for a second consecutive day over the 50-day, and some are going to look for even more than that. But I thought that was a nice development early in our first session of the week.
Yeah.
Okay, Ray, let's take a look at our transports here, and we'll do this as a quick measure of, kind of the overall feel about the health of our economy. The transports have done pretty well. We are sitting at an important spot. Notice where we are relative to the 50-day. If I just went with the 50, you'll see that we are right at it once more. It's kind of an interesting development, Ray. It is still higher lows, and even though we've been not made a higher high recently, I'm a little bit noting the lack of momentum here, though, Ray. The RSI doesn't look too fantastic, but what are you taking away from transports here?
Yeah, I think everybody knows this too. It's pretty much fuel driven.
Yeah.
Um, it's a big part of their how their one of their expenses, obviously. And
Hmm.
and a little bit of slowing of spending. Does that mean we're shipping a little bit less? Is it slowing down a little bit this time frame? So maybe we were seeing a little bit. I, the recent it is making over the last month. It is making some higher highs. That circle area you've drawn in there, it's showing it is more of an slight upward trend than not. Yep, there you go.
That's the 100-day, by the way.
Yeah.
That looks a little more interesting, doesn't it?
Especially when you hit that earlier back there in March, April
Yeah.
time frame, and how this kind of mimicking that same kind of look right now.
Yeah, that does seem notable. And you called it out. I mean, obviously, we're going to see these spaces move relative to what's happening with fuel. So let's look at oil here briefly, Ray. We remain in a consolidation window on oil, unfortunately, and that's not unfortunate. It's actually a positive, but it's not
Yeah.
helping me in the at the pump. I can tell you that I continue to pay way more than I want. Ray, we're looking at the futures symbol, not advocating for futures, just
Nope.
reminding you we're looking at price action here.
All right.
The biggest thing that we're able to see pretty clearly, I'll put up the 200 day simple moving average. Ray, we had this huge spike in oil that took us up to 120 or so, and now we've basically just been unwinding that trade. There's really nothing going on outside of that unwind right now, is there?
No, and the are we gonna are we depleting our reserves more than we want? Is the oil getting out? Obviously, through the news, you understand that we don't use that oil as much. That's world oil, which is driving a lot of the price, not because of the U.S. So we're pumping. A lot of other countries are pumping. The oil's getting out, but it's that fear of what's happening across the whole world, which causing that the pricing change, um, or the price action, I should say. But yeah, it's it's kind of one of those unfortunate things where you gotta wait and see. You
Yeah,
know,
I know.
is it especially coming into the holidays or it's weird to saying that now, but it is. We're going to be hitting September here soon, and the holiday season's coming up, and what's going to happen around that and in the elections, and so I think we're going to see the continued volatility in that range. Um, and it's the unfortunate political game that's being played with the oil.
Yeah, and it is risk relative to headlines,
Yeah,
obviously. There's a good question in the chat about which subsector of energy is maybe most correlated with prices. I'm not sure if it's most correlated, but it's the ones that are moving, Ray. It seems to be, your equipment and services. Let me just highlight this with a look at one of these Dow Jones indices. Here's the equipment and services look. This is an improving chart, is it not? I mean, you've had
yeah,
obviously we've got highs back here, right? Pretty clear. And we had an uptrend that was working with like a 20 period moving average, or maybe even more appropriately, a 50 period, when it was bullish for a long, long while. And then, Ray, we've recaptured that bullishness now. And I'll tell you, that's an improving looking chart. And it might just be equipment and services
yeah.
as a
Um,
subset.
and the thing is, a lot of people forget this. It seems like they get so focused in on the price at the pump, but
Yeah.
everything petroleum touches almost every single thing in our life. I mean, in different ways. Farmers got to use diesel mostly diesel to
Hmm.
run their machinery, but petroleum products are in everything, plastics. I mean, even cosmetics. Uh,
Hmm.
I mean, petroleum is a huge thing across all sectors, and so it affects things differently. And so it's not just price at the pump. And so I think maybe that some of those things you're seeing some of that getting priced into a lot of different aspects of our lives, and you got to keep that in your mind is all I'm trying to tell folks. Keep it in your mind. Don't
Hmm.
don't get fixated just on the pump.
So a good reminder, obviously, Ray, and that's really why that question from Rita was so perfect
Yeah.
for the topic, right? It's because there are differing areas here. Here's oil and gas producers, by the way, and you can see the bullishness on this
Mhm.
chart in a couple of ways. One, we've met resistance. We were basically bull flagging at resistance after having come out of a bull flag that was broken to the upside. Clearly, now you've taken out an area of former support or former resistance, now potential support. And then just to carry this forward for another thought process, if you wanted to dive into these spaces a little more clearly, don't forget you can use something as simple as the heat map to figure out where those areas are and which companies could be in those areas. Now, I'm going to do it with only the S&P 500, but if you wanted to look for small caps, you could do it that way as well. Opening up energy and then going to maybe equipment and services this way, or oil, gas, and consumable fuels that this way. So this will give you some insights as to which equities might be pertinent for the various spaces. They're by no means recommendations, of course, just
No,
a process to dive in and dig a little deeper for yourselves. Definitely something we do want to encourage you to do. The research, the homework, right? Get yourself
exactly.
get yourself a little bit of work done so that you can make an informed decision. That's ultimately what we want to encourage. Now, I did see we have a survey in the chat, everybody. We would love your feedback in the survey. It takes all of 60 seconds. If you click the survey link, it'll open in a browser window right next to this one, and then you can get to it post class so you don't miss anything. You can take all of the time you need if you'd like. Any comments that you make in the survey, they come to Ray and me directly, and we always appreciate hearing from you. We try to incorporate those
Definitely.
in subsequent classes as well. Okay, Ray, from a sector basis here, now I know I've got some stocks in the news I want to hit on, but I'm just wondering, is there any one sector that you've been trying to keep a close eye on, or one sector that might be telling you something about the current environment of the market that you wanted to make sure we touch on today?
Well, I think energy has been one of them, and obviously, um, so that's a big one. because that's driving a lot of different things that's happening.
Oh yeah.
I always watch the financials. Shocking.
Oh, that's the wrong one. There's the
Yep,
financials for you, Ray. Wow, look at the financials,
there you
man.
go.
Is that the 20-day still? Sure
I think it
is.
is.
Wow.
The
So
big,
more of the same there.
yeah, and the big battle of are they going to increase rates or not?
Mm-hmm.
How that affects the financials. I think they said after the last news here, they're looking, they probably will not increase in the
Yeah.
next. So,
Well, as far as how traders are positioning, correct. It looks like we had a shift in expectations following that jobs report, and,
yep,
and it kind of squashed the idea of a rate hike a little bit.
yep,
It didn't squash it entirely, of course. Traders repositioned a little bit more dovishly than hawkishly, but that, we're going to wait to hear. The biggest issue, as I see it, is that we're not getting the foreshadowing from the Fed that we were previously. They have no interest in being quite as
yeah.
transparent as prior Fed governors had. So we'll see how that works out for us. Ray, anything else you want to touch on? I want to get to some stocks in the news, but I want to make sure that I give
I
you.
think we you did a good review of the top down. I think it hit most things I watch as well. I think you do too. But uh, I like that approach because that is the market. I mean,
Mhm.
I think that's a good way to start the week, and I think a lot of folks who come to your show here, they use that same approach, is to watch what's going on in the market, look at all the indices, see what's happening, because rising tide lifts all ships, right?
As they say, that's what a Navy man once told me, at least.
Yeah.
Anyway, not that you're a Navy man by any means, Ray. I know better than that. You're a Marine.
Department of the Navy.
I
You
learned
know what
my lesson
department that
there.
is.
So, Ray, let's talk about some of these stocks in the news this morning. We actually got a upgrade, excuse me, on a fairly large company. How about Apple? Apple was upgraded at Rothschild and Redburn. Analysts upgraded it to buy from neutral with a new target at 400, up from 260. The firm sees iPhone sales growing 12% annually and up 14% above their consensus expectations all the way through 2030. So this is a nice development for a company in an obvious uptrend, but more than anything, what caught my eye, Ray, there was a very large move following the earnings. So the earnings were
Yeah.
digested bearishly. We had a huge gap, but since that gap down, Ray, we've actually held support.
Yeah. And I think a lot of investors know what next month means for Apple, right? The big announcement. What are they going to do with the new iPhone? Uh,
Hmm.
and that they got a lot of talk already going out about that. So I think it'd be interesting to see how that folds out over the next month.
It's funny you said folds out since we're talking about a foldable phone. That that works out beautifully. I see what you did there. The further notes according to Rothschild that they have the confidence that Apple's relative valuation multiple is well supported at these levels. The firm believes Apple may be able to, quote, assert itself as the gatekeeper of consumer AI and delegating AI workloads to a subservient fleet of open source models, end quote.
That's
So,
some
hey,
that's some words right there now.
that was a lot of words. I'm not entirely certain that I can evaluate that and explain that at a level that I can, take in. But that's according to Rothschild, nonetheless. Now,
Yeah.
if we're watching it from a technical spot, we can obviously speak to the fact that Apple has been solid against its 200-day moving average, but it's not the only moving average to monitor. That's certainly a possibility. Under the 300 level, we could certainly see 280, 281. But for you longer term traders of Apple, go back to a 5-year weekly as this chart is, and look at how the last time we tested the 200 week back in April of last year, that was an entry opportunity. And you can also extend that time frame, everybody. Go out to 10 years or 15 years and then just find your opportunities along. My goodness, Ray, is there
Yeah.
a more appropriate moving average? I mean, goodness, you have to go all the way back to the beginning and you've had one deviation below it, and that was an intra-period deviation below it,
Yeah.
right? This has been amongst the most stout moving averages you can follow
It's
here
kind of
for Apple.
it's kind of hard to argue against Apple on that when you look at that. I mean,
My goodness.
I think since I've been doing this for 20 something years as well, I think we've used Apple as an example in so many things, so
Hmm.
many times. It's been a pretty consistent player in the field.
That is for sure. It's not the only one, but many positions in the market are going to show trends similar to this one over an extended period of time. Again, time frame has a lot to do with when you choose to expose money and not
Yeah.
expose or pull money from your investments. So always give thought to it, but I found that weekly chart on Apple to be kind of interesting to me.
Yeah.
There was also an upgrade on Cisco's system. Cisco had a wonderful rally, and Ray, so frequently we notice breaks of a downtrend line leading to new moves to the upside, but Cisco got beaten back following this most recent earnings report and may be sitting at an area of horizontal support.
Yeah, it looks like it is, honestly. So you may start seeing it like consolidating those in that range until more uh, more action, more activity comes up with it. Yeah, I think that support level is pretty strong right there. I mean that gap, it gapped up through that. That's still that same that created that support when it gapped up.
Yep.
Um, and there you are. I mean, again, it's not rocket science.
Doesn't have to be. We don't have to make it hard,
No.
right? Now, if this is good support, Ray, one thing that we could do, we could always draw that Fibonacci in just to see if it validates this level that we're bouncing off. My question to you, Ray, would be, would you draw such a Fibonacci move from, the day following the earnings, so May 13, May 14, when you had the low here, when something changed, right? We had earnings to work with, hence
Yeah.
this big gap. Or would you maybe draw it from when when the move started back in early April?
For myself, I'm not saying it's right or wrong. I tend to enclose that gap because
Okay,
that's
so something like the low here before
yeah,
the
because
gap.
that's obviously a huge change of mindset on
Yeah.
investors because of that price and where it's going, and there you go. And again, that's why I kind of met it back to that level you identified there as
Hmm.
a support level because of the gap. Um, and that's how I approach it.
Okay.
I'm not saying that's right or wrong. That's how many investors may do the same thing.
Hmm.
It's just, in an area that we've got some good consolidation, um, that bounce off as it defines. You got three main areas right there where it's done it, and it's doing it right now.
You know what I think it's always a good reminder, a couple of things. Number one, whenever we draw this stuff, especially Fibonacci moves, what matters is timing of note, meaning as we called out here, it's the earnings date. We could have started it even earlier before the earnings, but it's the actual earnings that developed the move to the upside, right? The reason for
Yeah.
the breakout was tied to the earnings and the guidance thereafter. So it becomes an important spot. Now, additionally, the reminder needs to be that Fibonacci's aren't telling you the future in any way. Commonly, where a trader is going to use Fibonacci's is for validation of
Mhm.
existing areas that appear to be support or resistance. And that's what we've done here today with Cisco. We viewed these recent lows here and then the ones we just made Friday and today as
Yep.
possible support. The fact that it coincides with that, for many traders, Ray, that last line of defense in a retracement ledge, the
Yep.
61.8% retracement zone, may give a trader confidence to deploy new money to the trend here in the belief that it can carry and continue the uptrend over the longer term.
Yep.
So this was a really interesting chart, and to apply the Fibonacci's to see that play out so cleanly is a nice development. It's not always going to be clean like that.
Yeah.
All right, and then one final upgrade was in another one of these. Volatile Positions, ALAB. It's Astera Labs. Now, this one, Ray, doesn't look quite as bullish all of a sudden. I mean, we're mired under the 50-day, but they were upgraded at Northland today to outperform previously at market perform with a 350 price target. Not exactly a lot of upside premium based on that target, but it is above the 20-day, could be establishing some higher lows.
You got a nice bull flag right there, kind of formed with that as well. And so,
Sure.
yeah, I mean, I think yeah, it broke out right there.
Hmm.
Hole. And then, yeah.
So, Ray, at this point, I mean, yeah, I agree. Broke the bull flag, but even if you're bullish, overly bullish, and expecting a move through the 50-day, for many traders, something that takes out the 20-day, or even if I redrew that low and said instead of it being angled, we just take out the lowest low we've seen since the break higher, that could be a ditch out spot where a trader would say, yeah, I don't need to stick in for the potential move to the 200-day if it takes out that horizontal support.
Yeah, I mean, but that's what that's why we talk about money management when you get into your trade. You always got to look at that.
Yeah,
So, we don't know where it's going to go. You just got to look what it did. Did it break out? Did it break out through? That was down today right now. As it did that breakout, it's pulling it back, testing it, but
right.
it's still above it, you know?
Yep.
If it gets across that 50-day moving average, you got drawn in right there. And look what it hit. It hit right to that point, pulled back a little bit. Now it's wondering where it's going to go. So yeah, I think watching that 50-day break more than the pull back down um, is kind of where you want to watch.
All right, so we've got a level to keep an eye on ALAB. Gang, we are at time. Need to wrap it up. Couple of reminders for you. We've got that survey in the chat. Ray and I would really appreciate your comments and ideas on how things went today. So take a minute to complete that. If our conversation was helpful, you can hit that thumbs up button down below for us. That'll help us out in the YouTube algorithm on a replay basis. And of course, make sure you're subscribed to the YouTube coaching channel. Thanks to Connie Hill in the chat this morning. Thanks to Ray. Ray, always appreciate seeing you, buddy. Ray and I will be together next in New York in a couple of weeks. But for those of you looking for another Ray fix, don't forget we've got the the advanced options class this evening. You can get to that on the coaching channel. Make sure you register for that and are part of the ongoing event for the next 5 evenings. So big thanks, Ray, and thanks to all of you for being here. Everybody, have a great rest of your Monday. We look forward to catching up with you all again real soon.